You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for a little bit of the old bi-weekly options action known far and wide as the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating Options Insider Radio Network. Reminding you a couple of things. First off, if you like what you hear and you're one of our many on-demand listeners, then go ahead, leave a rating. You know, we've been doing this for a long time, but there's a lot of new people discovering this content all the time. So your ratings out there mean more now than perhaps ever in the 15-plus year history of the network. So if you like what you hear, keep rating and reviewing. If you don't like what you hear, send all your hate mail over there to the Rock Lobster. He loves it. He eats it up over there. And, of course, if you want to go above and beyond, the network, 2 shows a day, you need more in your life. I got you. We got you covered. Don't worry. We got pro Q&As on Tuesdays. We've got Options Oddities on Fridays. We've got giveaways, which are causing no endless amount of consternation with my co-hosts here. They all want the cool stuff that you guys are getting because we like you pro folks. Of course, live access to this, every other show we do throughout the network, and a whole bunch more. TheOptionsInsider.com/pro is the place to go to get access to that. Maybe if these two guys went and signed up at the pro, they could, too, get access to the awesome pro trading crates that are going out willy-nilly hither and yon and causing so much hubbub on Twitter these days. I get it. They're awesome. Everybody wants them. Not everybody can have them. They're exclusive to our pro folks because we like you folks. We like everybody, but we like our pro folks because you go above and beyond. So we go above and beyond for you. People are hitting us up. How can I buy these? You can't buy them. You got to go theoptionsinsider.com/pro is the place to go to learn more about all that goodness and a whole bunch more. And speaking of the Umbrage twins here, I am joined by, first off, from the dark and stormy shores of Maine, a.k.a. the land where Umbrage was born, by the not the greasiest, that'd be the other guy, by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the program. I see you're giving our listeners Umbrage on Twitter because they're winning fabulous prizes and you are not, sir.
Yes, they joined the Option Insider Secret Club. They get all kinds of goodies, and I don't know what I got. So I took umbrage. That's what happened. I want my umbrage box. That's what I wanted.
Some folks are market takers. You are an umbrage taker. That's just what you are. It's in your bones, sir. You can't deny who you are at the end of the day. So yes, when our listeners are reveling in all of their awesome goodies, our co-hosts here are taking umbrage, including the uncleest of Mikes, Mr. Uncle Mike TOSAW, a guy who doesn't usually take umbrage. He's out there in the hinterlands. He's eating his delicious Skippy's gyros and lemonade. All is right with the world in Uncle Mike land. And he too wants in on the pro trading crate action. He too is jealous of you pro listeners. Mr. Uncle Mike, sir, what have you to say for yourself?
Umbrage.
Umbrage, yes. The two of you. I got the Umbrage twins on me with the show. Instead, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
I will say I'm looking at the mountain of stuff that we just brought up from the vault to replace the mountain of stuff that just went out to our listeners. There's a ton of it, A. And B, yeah, you're right, it is pretty cool stuff. So I would be jealous, too, if I wasn't within easy proximity of it. But I don't touch it. It's for you folks out there. You know what else is for you folks? It's the trading block. So let's get to it. Another one of these weird starts to the session, listeners. Earlier today, we were all green. All was good. It was Uncle Mike land. Then as the umbrage started setting in with the markets, everything started turning to the dark side. And next thing you know, we're in rock lobster territory there, listeners. Coming into the start of the show now, like I said, we were green. Now we have all turned to the red. S&P off about 0.5%. So back below that 3,700 level, 36 and about 3/4. Let's see, how high do we get today? We got north of 3,700, obviously. Looks like about 3733 or so before giving up the ghost. That was all the bulls had today. NASDAQ off about 1/4. Dow off a little over a tenth, about almost 0.15 on the day. So it's kind of a muted middle of the session. We all know this thing could swing 100 handles in either direction in a few minutes. We've all lived through that recently. So we all know that could come. So right now, who knows what's going to happen. But we are all trending red right now. It means all of our vol friends who were looking a little bit lighter are now starting to get some of their juice back. VIX back above 30 when we kicked off the show. It was starting to dip below 30 earlier this morning as we were rallying, now back up north of 30. When we kicked off the show, about 30 1/3. That's still down, but only down slightly from where it was on Monday's show. It's down, about not even 3/4 of a point, about 0.7 from where it was this time last show. On Monday, of course, we have VVIX, the vol of vol, was looking a little bit lighter. It was 85. Now it's back up to an 87. That's still down about 11 points from where it was this time on Monday's show. So pretty much frothy, still frothy, but coming off a wee bit. Again, we're not moving 2+%, at least not right now. So we shall see, listeners. That 100+ vol of vol is hard to maintain. VXX actually starting to make sense again. 20 1/4. Down a little, almost 1/4 of a point, about 0.2 of a point right now. UVXY back to a 12. It was down about 0.5 point. Now it's only down about 1/3 of a point. SVIX, when we kicked off the show, was at about 10 3/4. It's actually, that puts it up about 1/4. It's actually about a 10.65 now, so it's almost pretty much unched on the day, up about 0.15. We got our other friend out there, UVIX, the levered friend, is hanging out was at about a 12.30 earlier this morning. That puts it down about 0.8 of a point. It's at about a 12.70 right now. That puts it down about 0.4, so not even half a point out there. And our old friend VolQ, a.k.a. the At The Money Vol of the NASDAQ 100, is at about 34 1/4 when we kicked off the show, down a little bit more than a point, down about 1.05 points from where it was on Monday's show. So a whole heck of a lot of at least right now from a vol perspective. We'll see if we start our whipsawing again. That could change in a heartbeat. Well, let's go back out now to the land of Uncle Mike. Let's see if he's recovered from his infected umbrage that he picked up from the rock lobster. Mr. Uncle Mike, sir, what is lighting up your tape in a day that was kind of an Uncle Mike day, but I think the markets absorbed your umbrage because they have turned red now too, sir.
Short everything, the market's dead. That's what Andrew's been doing to me.
I can get behind that. Let's do it. Let's all do it right now.
I mean, with today, until we have, it seems like we still have a bad news is good news type of market. And it seems to me that we don't have enough bad news yet. It's like we almost need more bad news to convince the Fed not to raise any more interest rates. And then I think from there, we might get a positive uptick in the stock market. That just seems to be the feel of this right now. Are there opportunities? Yes, of course. We have a 30 VIX. If you want to sell puts out of the money, you can go pretty far out of the money and at least make a little bit of money if that's what you're looking to do. So there are opportunities there. Of course, you need to manage risk and determine what level of things is best for you personally. But for the time being, it's going to be very difficult to get a bid in this market until we have a reason to have a bid in this market. Treasuries are going down as well. Bonds are down roughly, the 10-year down roughly 0.5% on the day. So yields continue to go higher. And what's going to be difficult is that when you're at a point to where you're a mom and pop investor and let's say you're 60, 65 years old, you can get 4 or 5% in a fixed annuity. Why would you want to mess with the stock market? That's what a lot of people are going to be thinking, in my opinion. And so when you have that kind of competition, you're going to take away people who are saying, well, there's no interest rates right now, so we might as well just buy stocks and get a 3-4% dividend on a Verizon or something that pays a dividend. And so you're taking away that investor right now, and that's not going to be an easy thing for stocks. So that's going to be something that's rather difficult and that you just need to have an adjustment to. You can get over 4% right now in a 2-year treasury. That's something that we've not been able to say for a long, long time. Also, we have a little bit of a bid coming in commodities today, so they're up a little bit in the silver space. Oil's relatively flat on the day, and Bitcoin is still not a pleasant investment, in my opinion.
It's not pleasant. It's super pleasant. You really love. Hashtag Uncle Mike really loves. Is that your other website? Uncle Mike really loves Bitcoin. Bitcoin is super awesome. I should do that,
then I can straddle the whole thing.
You could. You have both. Bitcoin sucks and Bitcoin is super awesome.com. Both of those. You'll have both ends of the spectrum. People loving you, people hating you. It'll be good times. And speaking of hate, we go out now to the dark and stormy shores where he's left alone just to brood and to once in a while take his toll from the clam pirates. Mr. Rock Lobster, sir, what's going on out there as these markets are starting to turn?
It's a very interesting market. Let's put it that way. So I agree with Mr. TOSAW. Well, I agree with him on a lot of things when it comes to a lot of this investing stuff. But right now, when you're looking at it, so I think markets always have a hard time when something is going in a runaway direction. And right now, the runaway direction seems to be interest rates going up. And again, I'm like a Milton Friedman disciple on this kind of stuff. And everybody was wondering when this modern monetary theory, remember you heard this? Well, you could just keep printing money and it's all going to work. And everybody remembers that, right? Like, hey, like during the COVID thing, or the government will just keep printing money and it'll work, right? And the thing with inflation, I don't think, you never know what's going to cause it, right? But certainly having so many dollars flying around, people jumping into houses, there was a lot of dislocation over the last couple of years. And I think that's caused, and G7 governments they're responding by spending and spending and spending. And, depending where you read, maybe whatever they did probably didn't work out very well, or it was all unnecessary or whatever it was. But we're still left with sort of the hangover. And right now, I think that's what the market's dealing with. So the Fed has no choice to start to raise rates to get the money creation thing somewhat in line with reality because, for whatever reasons that we have inflation, like I'm sure every economist will argue or disagree with whatever, but we have it. And I don't think it's an imperfect science to figure out how to make it go away. So if demand starts coming down, that's certainly a way that that's happening. I think also we have energy, and energy prices are playing a role. And none of those policies still, I believe, have turned the other way to just basically produce more oil and gas. And this is like a global thing. And then OPEC is helping. So, I mean, I could go through the list of things that are causing inflation, or that probably spent the last 2 years helping until it just got to a crescendo, right? And so you can argue that we kind of tipped over the edge, whatever that edge was. And that happened over the last year to 18 months, right? The Fed not doing anything when inflation was already starting to peak its head up. You got to say, hey, wait a minute. So we have this inflationary cycle. It is caused by multiple factors, and it's not going away. And the Fed is continuing to move in the same direction, which is continually raising rates. So as of the market, stocks are not used to, right? Equities aren't used to this, right? Everybody's used to the Fed bailing them out. Like, hey, we're gonna extend, we're gonna do the next QE or the next twist or whatever, right? So how long it's gonna take to shake us from this, I don't know. I have no idea. All I can say is that VIX tried to go below 30 today. We had a little rally on decent corporate earnings that looks like they were coming out. I mean, they were okay. AT&T, which it was kind of a bellwether. Everybody for a while was thinking that, people aren't paying their phone bills, but they bounced from recent lows, all that kind of stuff. So I think that news hasn't been terrible yet. The rates haven't really, made it difficult for companies at least and all, to kind of make money, and they adjust. And they've been passing their price increases on to consumers, which everybody can tell when you go food shopping, right? Nothing like a jar of mayonnaise is like $5, something like that. I think I just saw the other day on sale. So that seemed like, wow, that's expensive. So anyway, until some of these things, the ship rights somehow, we're going to keep seeing it. Now, I think the UK Prime Minister, she resigned after a few weeks or a month in office or something. What did she do? She tried like supply side solutions. And she actually, the last thing she wanted to do was frack. So what is disturbing is there's like some common sense, maybe things and fracking to kind of increase production, which I guess in Britain, for some reason, they don't like it, I guess, because it messes up the land or messes up farms, or I don't know what it is. But, if you've got an energy crisis, you've got to figure out how to get out of it, because what's happening isn't working very well. So that's, that's what I see the issues that we have. The problems that are causing inflation, we are doing very little to address currently. Maybe somebody can say, hey, these are the things that are helping, but I don't see it. I don't see what the things are. Releasing strategic petroleum reserve for just to lower prices. I'm not going to say that's the best use probably of that oil. So I think that's maybe the only thing I could look at that was concrete to help the inflation thing. If the government said, hey, we're going to freeze the budget for next year or something like that, I think that would start I would think that would start the ball rolling in the right way. But we haven't seen anything, right? No indication of any of that stuff yet. So the market doesn't like the fact that rates keep going up. We have big announcements coming as far as, I think I got the dates, the ECB, October 27th, November 2nd, and November 4th, on how much all these countries are going to pop rates up. And then we'll keep moving on, and people will be buying bonds and not buying stocks, as Mike said. So that's, and we'll see what the actual budget deficit is for the U.S. When they start having to pay interest rates at 4% or 3% or whatever, when they need to roll some debt over. So I think there's going to be some hard, and it maybe just happens that the current White House is just the one that's holding the bag after, probably 15 years of, enabling fiscal policy. So I think that's really the biggest problem. And it's just taken a long time to work out of the system. And possibly just because productivity has increased so much in the last 15 or 20 years because of, phones and technology and stuff like that, that it offset a lot of the inflationary pressures that we had before. But I think now we kind of came to an end of it, at least that cycle. And now we're looking at the next cycle. So I think there's a lot of opportunity in equities, but, similar to my mantra, like in March of 2020, it's okay to find ridiculous prices to sell puts in certain stocks. If you want to own them at cheaper prices, if you still want to be an investor in certain names, I think you just look for dumb prices like no way it ever gets down there, and look for that put to sell. And that's the way to ride this out. I think it's very hard. It's very hard to be a call buyer unless you have some kind of, offsetting position, because you have to look at where the market is, and, the rallies just don't hold for very long. So again, tough market to be an investor. But with vol this high and some out of the money puts, and there's some stocks that look like they could be at great prices, I think that's kind of the trade, or the broken wing kind of put fly, if you want to be a longer term investor, not just get run over. And that's the market we have. And then every time you have a rally, if you own some calls, you dump them, and that's what we have. And it's hard to I don't know. I haven't seen. I've seen a lot of stocks that have bottomed and starting to do better, but I think that's just the market we have.
Just a crappy market, says the Rock Lobster out there. No, interesting stuff. Yeah, you're right. The British PM not lasting too long there, 44 days. Intriguing stuff out there. And let's keep on rolling into what's intriguing in today's market action. And it's kind of a bit of a mixed bag. We're starting to see earnings pop up more on the radar now, which is always fun because those are micro events we could sink our teeth into. Here's what they expected. Here's what they delivered. There's a much more concrete analysis to be done there versus the whims of macro, which can, as we've all seen, whip us 100 plus points in the S&P in either direction intraday on apparently little to no news. So yes, a little bit easier for a lot of folks to digest the micro. And we're kind of in a bit of a micro market today, it seems like. Let's start off with the macro, the indices, and go from there. VIX doing some paper today, 359. It's not a super quiet day. We did whipsaw a bit already. We were much higher, and now we have turned lower. So that's driving some paper, closing in on 360,000 contracts. The ADV right now, 663. So pretty robust out there in VIX options land. SPY looking similarly robust, even if it's not at its where it normally is, north of 5.5 million level right now. It's 4.5 million, or closing in on it. That's still definitely respectable. The ADV is also just moved a little bit shy of 9 million, 8.97 million. It was over 9 million on our last show. Still obviously very heavy out there in SPY land. The S, similar story for the S, 1.7 million. There was a time not too long ago I would have said, man, that's a freaking boatload of paper. If the S was north of 1 million, by this time of day, things were rocking and rolling. Now we're starting to see that almost on a regular basis. 1.7 million contracts out there. The ADV also reflecting that. The ADV close to 3 million contracts a day, 2.95 million. So the S is not playing around either, listeners. Small caps. Maybe they're spooked by the S. I don't know. Taking a bit of a break today. 332,000 contracts on the tape, at least for IWM. 981,000, though, is the ADV. That ADV is still threatening 1 million. If you want a deeper dive into small caps, let's say, as well as everything else going on in the world of futures options, we got our old friend Carly Garner joining us. She's usually got a good ladder, some crazy risk reversal going on in nat gas, something fun to parse. So we'll get something fun. That's coming up in pretty much exactly an hour here on the network for all you live folks, listeners, and of course, for all you on-demand folks. Just hit next whenever it hits the network. And then the Qs, 1.52 million contracts on the tape. The ADV right now, 2.87 million. Let's go out to the single names. Let's see what kind of micro day we're having. Cost you 218,000 contracts. That sounds like a lot, and it isn't. But also, compared to what we've seen of late, it's definitely respectable. That gets you to Meta, which is off about a quarter right now, trading 133 even. Let's see what kind of day it had today. It had a high of 136 3/4 and a low of 132 3/4. So 4-point range, that's not nothing for Meta right now. Good for 218,000 contracts Number 9, if you're tired of that other T-related Musk name and you want to get another one maybe, how about Twitter? Number 9, 220,000 contracts, up half a buck, so bucking the trend today. Trading close to 52.5, about 1% to the upside. Its range today of 52.5 to the upside, so pretty much close to where it is right now. The low was 51.60, so about a 90-cent range on Twitter today. Good, again, for 220,000 contracts. Number 8, Netflix. They've been making headlines. Usually Netflix makes headlines, it's not for the best reason, and they're talking about finally cracking down on password sharing, it seems like, out there. So folks are taking a little umbrage, as the Rock Lobster would like to say. Stock off about $1.70 right now, trading a little bit north of 270, almost 271 out there. Had a range of 278 and about a third, and a low of 268 and about a third. So pretty much exactly a 10-point range on the day, $10.02 to be precise out there for Netflix. So whipping around a wee bit today. Good for 310,000 contracts. This is also interesting because you remember just recently on the show, listeners, we got all the way up to about number 3, and we had barely broken 300,000. So this is definitely a more robust micro day. Number 7, back out to Snap. Remember, it's not just where you start on the top 10, listeners. It's how you end. That also is fascinating and shows what kind of day we're having out there. Snap, back to Snap. I'm talking about them in a little bit. Are they a social media company? Are they a camera company? Are they a drone company? Are they all of the above? Trading 1082 right now, off about 3 cents. So not a heck of a lot going on right now. On the day, they've been as high as 1136 and a low as 1071. So decent little range out there for Snap. And it's good enough for 313,000 contracts. So some folks are up to no good out there in Snap. Of course, they do have earnings today. That's what's driving all this paper. Number 6, AT&T, what the old timers, a.k.a. the Rock Lobster, used to call telephone. 16 3/4 right now, up about $1.20 or 7 2/3%. Nice little pop for them. On the day, they've had about a little over $1 range, 17.16 to the upside, 16.12 to the dark side there. It's not a huge range, but they are feeling their oats right now. And again, good for 387,000 contracts. Now we get to the chip zone. Today is number 5. It's AMD, always a stalwart, always a perennial contender in our top 10. Usually around this zone, the 4 to 6 zone. Today, right in the middle, splitting the uprights at number 5. 487,000 contracts. AMD up a buck, trading right around 58 and a quarter. It's had a high of 60.20 and a low of 57.40 today out there. 487,000 contracts for number 5. Number 4, the Amazonian, slipping a peg. Down from number 3 to number 4, 493,000 contracts for them. 116 and about a third, up about $1.30. Their high on the day is about 118 and a quarter. Their low is 113 and about a half. So they've had nearly a $5 range, $4 3/4 range on the day. So that's a pretty impressive range for the Amazonians. Hence, they're nearly 500,000 contracts on the tape, but they have been eclipsed. Going back to the chip zone getting a little bit higher today to the number 3 spot. Don't usually see them in the number 3 spot. That's NVIDIA, 573,000 contracts on the tape. NVIDIA also bucking the trend, 123.5, up nearly $3 or about 2.5% on the day. They've had quite the range as well. High of about 127.70 and a low of about 121. So nice little range out there intraday for NVIDIA, hanging out almost exactly halfway on that one right now. And then number 2. You know what it is, listeners. You don't need me to tell you. It's the fruit company, managing to still be green on the day, up about a third of a point, 144.20 right now. It's good for 645,000 contracts. That's, again, kind of almost minimum expected paper, the MEP for Apple these days. You expect on a decent day, or any given day, really, for Apple to have done about 600,000 contracts right now, and they have. So they've done the bare minimum. Their range on the day looks like it's about $3, 142.90 or so, and to the upside, almost 145.90 out there. So a little bit of $3 range, hanging out kind of in the middle of that range right now as well. Again, the market doesn't like it when Apple is red, so it's green, and the market, at least for now, is somewhat complacent. And then number 1, again, you don't need me to tell you, it's the big dog. It's the other Musk-related T name. It's Tesla, 2.7 million contracts on the tape right now. My goodness. So you're talking over 4x Apple. Talking over 5x NVIDIA, and it just kind of goes from there. Tesla, you know the deal. Earnings, usually a big driver for them, and that's pretty much the case right now. Off 14 handles, or nearly 6 1/3%. Trading right around 208 on the day. They've gotten as low as 202 even, and bounced off of that. They got as high as, 215 and about a half. So, wow, quite the range. $13.50, and they're hanging out right in the middle of that right now, pretty close to, right around 208. They're saying Musk came out and said we're pedal to the metal, we're doing well, but not enough. Not enough to keep the stock from rolling out there to the dark side out there. What are your thoughts on Tesla? You folks slinging a lot of Tesla? Hit us up, let us know. It's funny, for the amount of paper Tesla does, you don't get a ton of questions about it, which is interesting. You'd think it would be dominating our feedback, the amount of numbers we're seeing putting up out there. In terms of earnings, I kind of just rallied off a number of the ones that are popping off this week. Of course, we had Tesla yesterday, AT&T, American Airlines, Snap on the bell today, Whirlpool today, AT&T today, Amex and Verizon tomorrow. As soon as we get the updated earnings move results, and earnings season reports from our friends over there at ORATS, we will put those up on the website for you listeners. Tesla was pricing in $16.48 earlier this week. They've had about a $13.50 range on the day, and they're down about $14 right now, which is weird. These numbers are strange. $13.50 range, but they're down $14. Something's wrong there. But either way, it looks like they have underperformed their straddle a little bit, but then again, they have whipsawed a bit. So if you were judicious with how you used your premium, you still could have made out all right on this one, on both ends. So yeah, interesting stuff here. We'll get the updated numbers for you. Still a whole bunch of earnings season to go as we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we break down the weird, the wild, the crazy out there. You know, I'm hearing from our producers, the reports just came in for all of these names here from ORAT. So obviously it's a whole boatload of data. I'm not sure if we'll have time. Maybe we'll get some of it a little bit later, perhaps in the mail block if we have time, listeners. We can parse some of the numbers, the most recent numbers out there for all of our friends. Tell you what, I do have an updated earnings move results report hot off the presses for Tesla. So we'll do that right now really quickly because we know you folks like some Tesla. Again, they were at 222, pretty much even going into this report. I should say going into their announcement. When they ran this report just a few minutes ago, it was at 209.25. They were pricing in 7.6%. As I said earlier, it looks like they underperformed a little bit, and they had moved about 5.8%. So you're talking a roughly 24% underperformance from what was priced in versus what was delivered out there. So actually a little bit of underperformance, which is, again, kind of interesting. Looking at the numbers, cursory look this morning, that's kind of what we thought as well. AT&T really quickly as well. They were this morning before the bell. $15.50 is where they were going into their announcement. They're pricing in 4.7%. And as I alluded to earlier, they are outperforming, up nearly 9% right now, trading nearly $17 when they ran this report here. So a tale of two cities here. Tesla underperforming from a vol perspective, even though they had quite the intraday range, and AT&T outperforming to the upside. Let's do a couple more here really quick. Let's go to IBM. They were yesterday after the bell. I haven't talked to good old Beamer in a long time. They were 122.5. They're pricing in 5.4%. They delivered 4.6%, so they delivered a little bit of underperformance for good old Beamer. Let's go out to Alcoa as well. Like I mentioned, they used to be the kind of unofficial kickoff to earnings season. These days, I should say, I don't think anyone's really waiting for Alcoa outside of folks very focused on the aluminum industry. They were yesterday after the bell. 37.62 is where they were going into their announcement. They're pricing in 8%, which is a fair amount of juice for aluminum. But then again, inputs, inflation, a lot of vol in that space right now. 6.9% is what they delivered. So a slight underperformance there as well. We got a whole bunch of other tickers, literally hundreds for you listeners. That's just a quick cursory glance at some of the ones we know you folks know and love. Let's get out now to the names you folks know and love here on the Odd Block. We're going to do a little bit of paying off. Remember I said on Monday's show, listeners, I said, I have a feeling we're going to know how some of these trades are profiling, how they worked out. And we do. Let's kick it off now with one of the big ones we talked about on Monday, which is Ericsson, ticker symbol ERIC, ERIC. I won't even bother with the ADR name because it is, looks like 40 consonants here, 40 syllables. It's a meaty one. You know, Ericsson, Swedish networking telecom company. A year ago was trading 1184, got to its high for the year of 1278. That was in February this year. Then it was pretty much sold off. When we talked about it on Monday's show, the stock was about 640, and we profiled 22,604 of the OX6 puts. So again, these were going off this week. So we would know today that someone gobbled them up for 15 cents. It was a 114 vol. Again, when the stock was 640. They liked them so much they came in and did about 12,000 more, total of about 34,000 traded on the day. And we said there were earnings today, this morning before the bell. So we would know probably by today's show whether these worked out. And lo and behold, the stock right now below $5.50, $5.46. And it got as low this morning as $5.16. So it has rebounded a little bit out there, but still looking good, even though perhaps not quite as good as they were before. And it looks like these worked out. These puts were still open as of this morning. So on that first block, just that first block we profiled, they were up somewhere in the neighborhood of 800 grand. Again, we'll have to look and see exactly where they take them off, what the prices are. But somewhere in that neighborhood, of course, more north of $1 million if you add in the total of 34,000 that traded on the day. Mr. Rock Lobster, what are your thoughts on these Ericsson puts working out? Then I hear little Brady tells me you folks at the pit decided to dive into Ericsson as well this week.
We did. We looked at, we didn't buy the ox, we bought the nose. The nose 6 puts.
You guys are boring. You're not swinging for the fences. Go big or go home. Weekly puts, baby.
I know. I was trying to work into the calendar for just even money, like the put calendar for even money. But I never filled the October puts. Yeah, so we paid a quarter for the November 6 puts, and then we were selling them this morning between 75 and 85 cents.
Yeah, that was a conversation. That was a conversation we had on Monday's show because we were talking about it. And I remember Mark saying, "Well, why would anyone buy these? They could just pay a little more. It was a nickel more at the time for the Nove puts,
Exactly.
and you get a whole month."
That was our point. And as of this morning, I don't think they've closed all those puts. So what's weird is like right before that, Ericsson had really good news. Like, apparently they're doing the 5G network or some kind of something or other, and then it all just kind of went sad. And then they had some sort of earnings markdown, or I don't know, whatever the heck the problem was. I didn't think the earnings news was that bad, but the market certainly didn't like it. And it was pretty it was an impressive sell-off, I have to say. So yeah, so we sold the puts and it worked out okay, but yeah, there's no way you're pronouncing the actual name of Ericsson, by the way. So
it is an abomination on the tongue.
Money was right. Very, very right. Very fast. Yeah. And they still have 20,000 open on this on the OCT. So the November, actually, it was probably mostly option pit people. And those are about 80% closed, taking the money and running.
There you go, listeners. The Odd Block, inspiring profits far and wide here. We kind of joked on the show. I mean, the stock's already down to $6. How much lower can it go? But it just goes to show you can still make money buying puts even on a $6 stock. You have to just be judicious. And of course, when you get the move, you got to take some of it off at least, because you never know how long these things last out there. Speaking of taking things off and how long they last, let's go out to our next name we profiled on Monday's show. It was a very near-dated show on Monday, listeners. We went out to everyone's favorite venture-backed vertical takeoff and landing aviation company. Of course, talking about Joby, and there's a million of these, obviously, but Joby is the one that just rolls off the tongue for everybody. Ticker symbol Joby, of course, JOBY. Hanging out right now, right around 4. And actually, I won't tell you where it is right now. That's kind of a bit of a spoiler. First, let's talk about where it's been on the year. A year ago, it was trading $9.09, got up to its high for $10.20. That was back on November 5th. Then it kind of sold off to like $3.60 in February. Then it kind of rallied again. By August 4th, it was back up to about $7. And when we profiled it on Monday's show, it was trading $4.43. And we profiled 3,816 of the October 4.5 calls going up again on the bid. So somebody was crushing these for 15 cents. It was a 95 vol. Again, as meaningful as such numbers are with a weekly contract like that, listeners. And the earnings are not this week. There was not an earnings play. The earnings are on November 10th. So this was someone just coming in, looking at the stock around $4.40 and saying, I'll take 15 cents to the upside about 4,000 times. And they didn't even play with it. They didn't even try to get 20 cents or nothing. They just went right on the bid. A little bit of harvesting the old risk premium. It wasn't the most out there of trades, but also the near dated nature of it and the fact that they're settling for such a little amount of premium, always interesting for us. And the stock right now, listeners, $4.22. So these are actually working out. But our friend here, this is a weird one. That's why it's in the odd block, because they put it on. It's a weekly trade, obviously. And we can't fault people for taking things off when they go their way. But this person did not wait long. That's also kind of shows the fallacy of selling these things for 15 cents with a few days to go, because he took them off yesterday, came back in and took them off yesterday, pretty much most of them. And he took them off for about a dime. So he made a whopping nickel. So he did all that and he covered his commissions. He made some money, but I mean, all that for a nickel? It's pretty much a little bit better than a scratch at this point. The stock at the time was $4.22, about where it is right now. So again, if you do the options math, you probably would have been good. Let's see, how high did it get over the past? Let's see, on Tuesday, I got up to 463. So it did break through his strike. So maybe that's what spooked him. He said, wait a minute, maybe I don't really want to sell my Joby, which is something you should always consider if you're selling weekly calls right around the at-the-money strike. You might have a good chance of having to sell that stock. So maybe that spooked him. And when it dropped back down, he said, that's it. I did too much living in the last couple of days. Again, you usually got to sweat when you're selling premium, listeners, especially in the weeklies, especially for not a lot of money. And this person decided, what the heck am I doing? I'm going to take these off and take my nickel and get the heck out of Dodge. Mr. Rock Lobster, is that your takeaway as well here, sir? The guy got a little spooked, and so he decided a nickel is better than losing money? Mr. Rock Lobster?
Making money is always better than losing money.
Yes, it is.
It's always better. I think that's I think that's safe to say, but 15 cents is a pretty hard decay.
Yeah, exactly.
Collecting 15 cents is waiting to the...
You wait until the last freaking second. End. Yeah. Maybe this person didn't realize that. He didn't get to that chapter in the decay handbook. Right. How come I didn't get all my 15 cents? It's Wednesday.
Should be short.
Yes.
It's 15 cents. You don't get it until it expires.
Literally the last second is when you get that. So that's the other...
I got my money.
Yeah. I think he realized that on about Wednesday. He's like, wait a minute. I've done all this for naught. I'm actually losing money right now. Maybe this wasn't the smartest of do's, as they say. So yeah, listen, that's why we usually take a dim view on doing this kind of thing, because you're taking risk for not a heck of a lot of reward. Again, maybe he's okay with selling the stock, but clearly he wasn't, because once it got north of 4.5, he got spooked. And it's just a strange trade. If you're going to do it, then do it. Commit to it. Get your 15 cents. If not, maybe you shouldn't be doing this trade. All right, we had to struggle a little bit to find something outside of the box today. And so our Eye of Sauron delivered. It's a newcomer again. This is OneSpan Inc., ticker symbol OSPN, OSPN. This is a publicly traded cybersecurity company based right here in Chicago. They're an anti-fraud platform that does a lot of multi-factor authentication. So there you go. Trading $9.94 right now. On the year, a year ago, it was trading $20.64. So it's been a bit of a rough year for them. It's been mostly pretty much down. They got to their low for the year back. It's like a few weeks ago, back in early October of $8.15. And so since then, the last couple of weeks, they've actually managed to rally from about $8.15 to where they are right now, a $9.94, up 64 cents today, or about 6.5%. So a nice little pop for them today. I guess a good day for multi-factor authentication. And someone, Mr. Rock Lobster, thinks, you know what? This is just the beginning of the upside palooza in everyone's favorite OSPN, because they came in and scooped this morning 4,338 of the Nove 10s, paying 80 cents. So they're not playing. That's a fair chunk of change for a $10 call strike. That's almost a 100 vol. It's a 96 vol. That was pretty much right off the offer. They got a nickel better. The stock was a little bit lower, $9.65, so they have probably ticked their way. Worth noting, there are earnings baked into that amount. That's why it was so hefty. The earnings are on November 1st. So they are getting a swing at the bat on earnings as well. But still, that's a heck of a lot of juice. Mr. Rock Lobster, nearly triple-digit vol, paying a heck of a lot of juice for it calls on a cheapy name that no one's ever heard of. This has all the hallmarks of a trade from about a year ago, sir. What say you?
Yeah, let's see. So, there is that first rule of odd block trading that we stick by, and these calls are green on day one. That's not too bad.
There are worse things.
OSPN won the span. Again, adding a new name to the litany here. Designs, Markets, Digital Solutions. Okay, reasonable company. What was this? This is nine. So it's a $10 stock. So it was probably a $70 stock last year. Let's see. No, not even close. Peaked at 26. I just figured all stocks were $80 or $90 last year. At some point or another. Somebody is kind of jumping in this one. Maybe taking a punt on earnings, and that the stock is going to make a move back. I mean, I have to say these are reasonably priced options given the potential move and where the stock is. And I mean, a $1 move in a $10 stock is not too hard to do. So I would say this is a reasonable use of leverage and they're trying to ride it into earnings.
Reasonable, says the Rock Lobster. Interesting. He likes these. His frame of reference for reasonableness has been adjusted over the last year, listeners, as we keep on rolling right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, listeners, it's coming up against it for our question of the week. You got about a day left. At Options is the place to go to make your voice heard. Our question this week: is our economy in a recession right now? Pretty straightforward. Heck yes, heck no, or we need a new definition. Uncle Mike, you've had all week to ponder this one, sir. What is your vote, and what do you think our audience is voting for?
I'm going to say we need a new definition because I think we do need a new definition. Because everyone keeps changing it all the time. So let's get a new one that we can all agree on. And I think the audience feels the same way.
And that's why we added that, because clearly no one wants the old definition. No one's using it. By the old definition, we are demonstrably in a recession. There's no arguing. But no one seems willing to admit it. So clearly we need a new definition of a recession. Mr. Rocklofts, same question for you. What is your vote? What do you think our audience is voting for, sir?
We're in a recession. The economy shrunk for 2 quarters in a row. That's a recession.
But we have to wait until the government officially pronounces it, sir. And they're not doing so going into midterms. So,
yeah, I know. So I guess it depends on which party is in the White House when the definition of
the definition needs to be amended to 2 quarters of negative growth, as long as whoever's in the White House also rubber stamps that.
Exactly, and agrees with the definition. So, and I think our listeners, you know what? I think they're a savvy bunch. I think they're going to say, hey. I think they're going to say, yes, we have been in a recession.
That is what they are saying right now. 78.6% saying, heck yes. 14.3% agree with Uncle Mike and I that we need some sort of new definition that everyone can agree on. And heck no, 7.1%. Get out there. You got about a day left, so you'll have time, listeners. At Options is the place to go. Let's try to squeeze in one more question. Let's go out to Jake S. He's been waiting patiently for a while. Jake S. says, hi. I'm a big fan of the podcast. We're right back at you, Jake. We're all big fans of yours as well. He says, I have an options question, and I wanted to run it by you. Well, you sent it to the right place. He says, I was assigned on some put options that I sold. Since the assignment, they are down. I think he means the stock, obviously, is down 40 to 50%. To try and recoup money over time, am I best to sell calls against it, call spreads, or a ratio call spread? I think longer term, these are good holdings, so I like to work closer to my cost basis on these. Thanks. Well, Uncle Mike, this is right up your alley, so I will toss this to you. This is kind of the age-old question. You sell puts. We always tell you, pick a strike you're comfortable buying the stock in. sounds like Jake got the stock and is no longer comfortable with that level. Obviously, the stock has moved down. And so he has the age-old question, Mr. Uncle Mike, of how does he make his money back? It sounds like he thinks long-term it's decent. So these are obviously now long-term buy and holds. That always happens as well. Are you down for a little bit of stock repair here? Or think you should get the heck out of Dodge? What do you think Jake should do?
Well, of course, it depends on the stock and Jake's overall situation first. But the choices that you have on there, I'm typically not a fan of just straight covered calls in a situation like that, because Murphy's Law dictates that the second you sell a covered call, the stock's just going to rip right through it. And so you're essentially selling at a lower level. So I'm typically not a fan of covered calls. The other choices that he had mentioned were a ratio spread or a call spread. Now, if you're thinking that the stock's going to stay in the same area for a while, I would consider a call spread if you're going to make any decent premium on it. Just because of the fact that you have the same effect of a covered call and that you're getting income, but in case the stock does just come back like a bat out of you-know-where, then you could at least participate in it by selling a call spread against it. Ratio spreads are good if you think that you're going to just sit back and watch it, or not watch it per se, and then just look at it once the ratio spread is close to expired. If you can get back to break even or close to break even with a ratio spread, great. But if not, I'd probably do the call spread or just do nothing at all and wait it out. If you still like the stock, of course.
Obviously, with ratio spread there, listeners, he means buying one and selling two. So more of the traditional stock repairs type strategy that you do alongside with the underlying of the hope that you get somewhere in between where the stock was where you bought it and where it is now. And that hopefully allows you to at least break even on your trade. Mr. Rock Lobster, anything to add here for our friend Jake S., who's wearing it a bit on some puts he sold, and he wants to know what he should do now?
There's, as Mike said, I believe there's the wheel trade where, you wear the puts, you sell the puts, you grab the divvy, and then you sell some calls against. I don't know I don't recall this one saying they got a dividend on this letter. But you only sell a call if you want the stock taken away. That's, and I think it's great for a qualified money account, because you just write a bunch of calls, stock gets taken away, do it again if you want. And you don't have to worry about the taxes and all that kind of stuff. I actually do like the 1x2 call spread to kind of gas the upside if you think the stock can go up. So, you put on the 1x2 for even money, buy one, sell two against your stock, and you try to, and you're placing the two short strikes above where you took the stock and see if you can get a double on the way back up. So I think the 1x2s, again, if they're priced for free, it gives you a second shot at some upside, which I don't think is too bad. So, and you could do those for short-term trades as well. Like, you got your stock and then, looking a little interesting for the week. So you have a 1x2 for the week, and okay, you make a little money on it. And you maybe have a shot to do it again. Or you're just taken out and you made some bucks and you go on to do something else. So you just, again, anytime you put any kind of option trade on, I would say have an opinion. You need an opinion. And is there anything extra in it for you to put the trade on? Is there any edge, for getting like a double on the upside? I see that could be a win. So if you need a reason, right? And I think an edge to have to put on an option trade is and an opinion. So you need A and B to make your move in there. And anyway, that's what we teach at Option Pit. So
there you go. And it is my opinion that we need to keep on rolling into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until our next episode on Monday. Let's go around the horn, the opposite of the way we just went. Let's start with the rockingest of lobsters. Mr. Rock Lobster, sir, what are you keeping an eye on until next show?
Well, like Mike was saying here, we need a little bit of a direction. We need something. We need something nice a little change, something positive in the markets to change the tone, and it is not happening yet. So I'm looking for that. I don't see it, although things did look kind of interesting today. I thought we might have had a little tone change, but the Fed saying, hey, we want to provide some liquidity in the market, but maybe that was just more of, wow, we expect things to get rockier, so we're gonna ask that, make that request. So you've got I just think that's what we have. We're stuck with it, and for right now, if you're an investor, you gotta look way out. Your time horizon has to be very long. And if you're trading options, your time horizon has to be very short.
Mr. Uncle Mike, same question for you, sir. What are you keeping an eye on right now?
3,500 level is a level that is now kind of the new low. We touched it briefly a week ago. We broke it briefly a week ago at the 34.91 level. And so I think that's just another level with which we need to keep an eye on. Of course, watching earnings as well, see where we're at with that, where we're going to go, what we're going to do, that type of thing. Below 3,500, though, the next levels are around the 34, 33 level. So we're kind of needing some support here in some way, shape, or form, because market doesn't always have to go up. It has over time, but it doesn't mean it will today.
All right, everybody, that music means we are done for this show, but don't worry. If you're hanging out in the pro crowd, then we got TWIFO coming up with Carly Garner in a little bit. That'll be coming into your ear holes directly for you folks on demand. That'll be coming a little bit later on the old network. So stay tuned for that. That should be fun. As we go around the horn, let's go back out to the Uncle Mike. Mr. Uncle Mike, sir, if folks want to reach out to you, see what you got cooking, where should they go? What should they do?
Follow me on Twitter at Mike TOSAW, TOSAW. And if you're looking for a financial advisor who works with the option product, assuming it's appropriate for the client, feel free to go to my website, set an appointment to talk to me. We'd love to have a conversation. stcharleswealth.com. stcharleswealth.com is the place to go. And of course, Mr. Rock Lobster, if folks want to get all that option pit goodness, piggybacking on those Erickson puts, where should they go? What should they do?
Go to call Ted or other Andrew, 888-TRADE-01. Say, hey, I heard this show, and even though Andrew takes umbrage in this show just about every day, we're still interested in checking out what Option Pit has to offer. 10% off. And even though that tight-fisted Longo won't give me anything, I will give you 10% off if you go to Option Pit. There you go. Take that.
I'm not tight-fisted with our listeners, just with my cohorts, because they take such umbrage. Give him a hard time over there, Andrew at OptionPit.com, for all of his umbrage listeners. That's going to do it for this show today. Back again for TWIFO a little bit later today. All you on-demand folks will get that after the fact. Back again tomorrow. Vol Views, noon Central, 1 p.m. Eastern. And after that, for all the joys, that is Options Oddities. We got some fun to talk about in there this week. Andrew and I have been having fun this week. Let me just put it that way. And then back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.